Good afternoon, everybody, and welcome to Tech Talk here at MarketStream.live. This is where we are going to cover charts, look at some moving averages, estimated moves that we calculate from the options, give us some forecasts, both what has happened previously as well as some forecasts of what could potentially happen in the future. My name is Joe Cusick with the Cusick Group, securities offered by MoneyBlock. And we got the markets right now challenging all-time highs. As a matter of fact, as I take a look at the markets, I see the small caps, the Russell 2000 up 340 again at 1319. I see the NASDAQ futures at 4855 up 4650. I see the S&P E-minis up 1250 at 2193 and a quarter. And I also see the Dow Jones trading. I see the mini futures trading at 18,909 up 56. Folks, we are challenging all-time highs. The moves have come at a very interesting time. A couple weeks after the elections, we have most of the earnings cycle over. Now we're focusing on fundamentals, technicals, and option pricing. I had some questions over the weekend about moving averages, so I wanted to spend some time in Tech Talk today talking about the different moving averages we use, why we use them, and some context on what you can take away from those moving averages. The moving averages that I've been discussing over the last month or so has been the 50 and 200-day moving average. Now, let me give you some context, and I'm going to add an additional one today that I'll be utilizing going forward, and that's going to be the 20-day moving average. Now, the 50-day moving average is a moving average that's typically considered an institutional moving average. Why do I say that? Well, really all it is taking 50 days of price action, plotting it on the line, and dividing it by 50, and then putting that point on the line. And every 50 days, that rolls. So on day 51, that last day gets chopped off, and you have the next 50 days. It's called an institutional moving average because institutions like to see stocks above that 50-day. When they see that stocks are above that 50-day, they're confident with the trend. Once it dips below, those that are long, institutions tend to get a little nervous. They may even cut back some of that holding. So that's why we look at the 50-day moving average. The 200-day is quite simply for us as investors to use as long-term support. There's a ton of price action that's plotted on that line. It really gives us a support. And the 20-day moving average. The 20-day moving average is typically used by traders. I haven't utilized this in the discussion that we have in Tech Talk because really we're not talking about trading. We're just looking at basic midterm trend. This gives you a shorter-term trend on the 20-day. It also is a good trading tool. As a matter of fact, one thing that you could focus on is when a stock pulls below a 20-day but above the 50-day, that actually could be an area where institutions might buy some. They like the pullback from the higher prices. They know it's above their support level of 50 days. That could be an area where you could see after it pulls down that they might start to nibble. So now that you have some context on those moving averages, how we use them, let's take that and look at some of the major indices that are hitting all-time highs today. Let's start with the S&Ps, and we're going to look. I'm going to use futures. If you don't have futures, you can use the ETF Spiders, SPY, but I'm going to talk in terms or in context of the S&P E-mini futures that are expiring in December. They were trading at right around 2193, and when I look at the moving averages, the 20-day comes in at 2140. So you clearly see that the underlying is above the 2140 level. It's trading at 2193 by almost 50 points. You have the 50-day moving average at 2142. And then you have the 200-day moving average at 2082. So we can see that the underlying is currently trading well above. This is really critical. If in fact we see a break above 2200, everyone's going to be talking about it in the marketplace. But you don't have any context. Okay, does that mean it's going to just catapult up to 2250? I don't know. Maybe, maybe not. It's no better than a 50-50 shot. But what I do know is that once it gets over 2200, then the enthusiasm wears off and it breaks back down. Now I'm starting to think, okay, it's above its 20-day moving average still. The 20-day moving average at the time right now is at 2140 spot 50. So 2140 and 50 cents. So I'm going to watch the 2140.50 level, right? If it starts to challenge that area, then I might start thinking as a trader, the trend could be in jeopardy. That's the short-term trend. If it gets below that 2142, 2140 level, not only then I'm going to watch to see if institutions that may have gone in and bought futures, if they start going in and selling futures, because the short-term trend of up is now being challenged. Obviously, I will keep a look on the longer-term trend of 2082, and these are going to be levels that you're going to start hearing over the next couple of weeks, where everyone's going to go, whoa, market got over 2200, it pulls back. It's now challenging 2145, 2150. This is a critical support level. Why? Because that's a support level that institutions are going to watch very closely. The trend is already in question because it broke the 20-day. And now you're looking at it saying, well, if the trend is now in question and if it breaks the 50-day, it could be broken. Now, long term, we can see it's still well above. So that's the level that we know that overall the market's still healthy, and we look for potential buying opportunities if we're bullish, right, long term, when it gets below the 2140 level. But that's where you want to watch the nibble. So also, what are the options telling you going into this time period, basically over the next couple weeks? It's basically pricing in the potential for the S&Ps to be either up or down. Right now, looking at the weeklies, the weekly options of around plus or minus 15. And after today's move, we're already starting to challenge those levels. Taking a look at the NASDAQ, right now trading at 48.55. Those are the NASDAQ December futures. Right now, the 50-day is at 47.79. The 20-day. The 50-day is at 48.10, and the 200-day is 45.58. One thing that's notable about the S&P and the NASDAQ futures is that the 20-day is below the 50-day. That is where now I'm looking at this saying, well, this trend may be getting a little tired. We need to see that 20-day go up with some conviction right now. If we're going to start to see some institutions going in and buying, because right now, even though the trend has been grinding to the upside and the momentum is still right now, as far as strength is concerned, to the upside, the catalyst really has been the election and post-election and all that analysis. And really right now, it's the innuendo of that we're going to have all these projects and so forth. So right now, I'm seeing a little bit of a market that's going to need more of a catalyst to the upside and get these institutions, especially in the S&Ps and the E-minis. Where I'm not seeing that is in the small caps, in the Russell 2000. The Russell 2000 is in a very strong trend, basically, for the last 14 sessions. Institutions are in there big time. Individual traders are in there big time. Now you're watching a breakdown between the 20-day and the 50-day. Once it breaks the 20-day, that's where the trend might come into question. The 50-day, that means that institutions could call it into question, and from a short term, you could see a little bit more of a sell-off. Taking a look at the Dow Jones at 18,909. Right now, 18,388 is the 200-day moving average. That's where I'm going to be watching first. Then 18,226 is going to be where I'm going to watch the 50-day moving average. A break of the Dow, and it's in a defined trend. Institutions are fully invested in there, unlike the S&Ps and the NASDAQ, which don't have the institutional support that you see in the Dow Jones and the small caps. And that's because I can tell from the 20 and 50-day moving averages. The 20-day is above the 50-day moving average on both those underlyings with conviction. And then finally, crude oil. Crude oil, you're seeing the 20-day moving average coming in at 46.17, the 50-day moving average in at 47.50, and the 200-day at 46.53. That's on the January contract. Now, crude has a lot of potential volatility in there with the OPEC meeting, a lot of rhetoric, warned about this. But at the end of the day, if you start to see a breakdown from where it's trading right now, which is 48.36, very impressive move to the upside. The first point of conviction that's going to get tested is going to be that 47.50 level, and then you're going to see the 46.17. But again, you see that the 50-day is above the 200-day, so there's not that big institutional or professional trade that has been picking up that bid. This has been more of an emotional, and it's also been driven by the headlines coming out from the potential outcomes from the OPEC meeting that's going to be on November 30th. Okay, folks, well, we covered those moving averages. We took a look at a little bit of the technical analysis, and we took a look at the options on the S&Ps and the NASDAQ to give you an idea of what they're pricing in for potential movement, which is for basically the remainder of this week, which is $15 either up or down on the S&Ps and $46 on the minis, which, by the way, they're testing that upside EMA right now, estimated move up 44. So we're going to keep an eye on that. Well, until tomorrow, we will see you again on Tech Talk. Join us at 4:30 for the closing bell, where I'll wrap up all of today's action. See you then.